But enough about me. I'm going to bring up the passive presenters tonight, Carol and Lynn. And y'all, this is going to be a fantastic presentation. Y'all don't know, it really is going to be. I'm excited about it.
We just set the bar right there. How about, so together you make Carol Lynn.
Yeah, Carol Lynn.
Carol Lynn. There you go. All right.
And the clicker?
I have it. You want it?
No,
No?
you can use
All
it.
right.
Okay.
I'll arm wrestle you for it.
You see it?
All
there
right.
you are.
Yeah, come on over here. Come a little this way. There you go. You stand right there on that tape.
That's right.
Okay.
So my name's Carol Wehrman. This is my partner, Lynn Young.
Lynn Young.
I'm an IT geek, so 1 degree in computer science and an MBA in accounting. And that will kind of play into how much time I spend doing some of this. But
Yes, I love it.
so I spent 39 years doing various IT roles, IT consulting, and about a decade ago knew that throwing money in IRAs wasn't going to get me where I wanted to go for retirement. And so I made a run at a franchise business. That went not so well.
Yeah.
Pretty much turned into 7 years of working 2 jobs. And then through a twist of fate, had the opportunity to retire unexpectedly last year and jumped at it. Lynn, you want to introduce yourself?
Okay. Lynn Young, as she already said, and I have both a bachelor's and a master's degree in elementary and special education. I taught for 18 years elementary, special ed, and adult ESL, which I loved. I also was in a previous relationship of 20 years co-owning and running a metal fabrication shop business. And right now I am substitute teaching. Took a big step down, just 4 to 5 days a month, and ready to get out of that completely.
Yeah. So we have a blended family. I have a son and a daughter. You'll see the pictures here. And Lynn has 2 boys and a stepdaughter, and we have
Daughter-in-law.
daughter-in-law
Yeah.
and numerous furry grand animals.
Dogs. Yes, animals, cats, yes.
And from a real estate perspective, I've had a rental house or 2 over the years, and then pre-LU had acquired several. And between the 2 of us, we have 5 single family right now, but they were all done not the LU way, really.
Yes.
And so, you know, while I knew real estate was a good thing to grow your wealth, I never could figure out how to make it scale the way LU teaches. So we joined in September 2022 and have jumped in with both feet. We've been very active, networking, attending events, getting educated, and really, you know, clawing money out of our IRAs and stuff to invest in multifamily.
So September 22, that's the tail end of COVID, right?
Yes.
Yes.
Yeah.
Still no fear.
No fear. Well, you know, you get over it, right?
Some fear.
Nerves, yes.
Fear or COVID?
Both.
Both, right. Yeah. All right.
So I mentioned this already, the fallacy of this big pile of money getting you through retirement. It had been very clear to me that wasn't going to work. Unfortunately, the franchise thing did not work out so well, and we had friends who are here today, who had been LU members since 2015 or 2016, and once upon a time they shared with us that they had joined LU, and I said, "Are you out of your ever-loving mind?
No.
You joined this, you know, pyramid scheme, swingers club thing."
Whatever it was, yeah.
And
It does have a nice name.
it does.
It does.
It does.
Yes.
The Ultimate Lifestyle Club.
Yeah.
But they kind of, we had seen the results of some of what they had been doing, and they nudged us again, and we listened, and we came and did the 2-day, and
Yes.
the rest is history. So
Right.
Oh, cool. And you're here tonight as passive
as passive
presenters, right?
That's right. That's
All right.
correct.
So how do you become a passive?
So how do you become a passive? Well, mostly you get educated.
Yes.
You meet people, lead investors, because you are going to give them money. And do you like them? Do you trust them? Do you want to give them your money? Do you think they're going to treat it with the same care you would? You get educated by doing the passive certification stuff online, attending events like this, attending road trips,
Meetups.
meetups.
Lots of those.
Exactly. And then also meet other passive investors and talk to them. Because, before you give a bunch of money to somebody, you might want to know what other people who know them think about them and what their history is and all of that. So the real key to being passive, I think, is getting involved, getting educated, and just meeting people, making new friends, and building that network so that when the opportunities come forth, have you met this person? Did you like them? Do you trust them? What do your friends think about them? Have they invested with them in the past, et cetera? So just be as informed as you can.
We have over 400 leads that look for properties and do deals. So you really have to carve out the ones that you really like because you'll run out of money before you run out of deals.
Yes.
Yeah,
Let me frame this a little better because we didn't really start off with it. A lead investor is someone that wants to go out and work. And a passive is someone that just gives them money
Wants
and
to
says,
let them.
go to work for me, right? Do all the work, pay me a dividend, make my money grow, and then send me big checks when we sell the property or refinance. So they as passives, how much work do you do?
Well, this is where the Excel nerd accounting stuff comes into play.
You need my T-shirt that says
Yeah,
Excel
that's-
is my Game Boy?
That's it.
Yeah.
That's it. That's
So
it.
you do a lot of
So
analytics. Do you read
I
your
do a lot of
reports?
analytics.
Okay.
I look at the monthly reports on every deal every month.
So let me trade you. How much work do you do?
Very little.
Okay, there we go.
I join in on the social stuff, and I will meet people and remember who just had a new grandbaby born and who's investing where and all that. That's what I do.
Okay, so you guys really tag team this.
Yes.
Oh, yeah.
Oh, yeah.
But you nerd out over this.
I nerd out.
I love that.
do. I do. Yeah.
Who thinks they can go to a meetup group and make friends?
Oh, yeah.
I mean, where's my leads? Put your hand up if you're a lead. There's a handful of you in the room. All right.
Yes.
Are you afraid if somebody comes up and introduces themselves to you? We love it. We love it. All right. You love it, right? Come in and say hello, right? Don't be scared of the leads. That's something I hear a lot. Oh my gosh, I can't talk to that lead. You put him up on a pedestal. Robert is just a dude that goes to work, right? Right?
That's right.
Robert wants to go to work, and I
And he
want to
loves
not
it.
go to work.
Yeah.
Yes.
It's a great symbiotic relationship. So don't put them on a pedestal.
No.
Make sure you get out there and follow their tips here. Go to the events and then talk to the people. Anybody in here an introvert? You're not going to raise your hands. Never mind.
She is. Yeah.
My wife is a super introvert. There's this big event called Expo. Anybody been to Expo? Expo is awesome. There's like 6,000 of us. We get together at a convention center. We geek out over real estate for 4 days. And my wife will come downstairs and she'll talk to people. I'm on stage a lot, right? Everybody knows me. And they're like, oh, we love your family. We see them on Facebook. And she gets back to the hotel room and she's like, my cheeks hurt from smiling. I said, just take a nap. Just take a nap. Introverts, go shake hands, kiss babies, go home and take a nap. You can do this.
That's right.
Okay, right?
That's right.
Yeah.
That's right.
So, how do you meet them? And
meet
then
'em.
you got the most importantly. What's the most importantly here?
Most importantly is meeting other passives.
Other paths.
Why is that?
Other passives.
Yes.
So there's only so much or how well you can know a lead, right?
Yep.
I mean, you're going to get to meet them at a speed dating event or something, talk to them a little bit at a happy hour, watch their presentation, get a sense of what you think about them and the opportunity. But the passive investors are the ones who've maybe been there before you. They know what they've seen on other deals. You can even talk to them about this current opportunity if you're both evaluating it. And they'll share, the passives will share freely with you, the good, the bad, the ugly. And it's just hugely educational and can make you more comfortable and more fearful about what's to come. But it's all good. I mean, the passives to me are the real key to the network.
They really are.
Yeah. And the passives, they gossip like a gaggle of old
Oh,
women.
yeah.
It's just, well,
Yeah.
you want to know something? Ask another passive.
That's right.
Right?
Yes.
Alan, true statement?
Absolutely.
Yeah.
Yes.
He's one of your local ambassadors, right? He's one of those party planners that puts on these events that they're talking about.
The meetups.
Yeah, meetups, sorry. All right, let's talk about your portfolio.
All right, so since September 2022, we have invested $1 million in chunks ranging from $25,000 to $125,000 in 17 different multifamily syndications with 16 different lead investors. in 19 apartment communities.
Excellent.
There's a couple of them are portfolio deals. All of our single family is here in Houston, in the Houston area, and our home is here in the Houston area. And the Houston area is kind of prone to certain weather events that might be a little disturbing.
Like
And so,
hurricanes, right?
and so we intentionally set out to scatter our passive investments in other places. And so we are in 7 different states. Now, granted, because Lifestyles is so big here in Texas, we are very heavily weighted towards the Dallas-Fort Worth and the Houston areas, but very, very interested in, from Utah to Ohio to Georgia. I mean, we're trying to spread it around, so.
And the reason you do that is when you take your chunk of money, whatever that chunk of money is, and you want to invest it, you're now a money manager. You're managing your own money. And you need to diversification, risk management. That's what you're trying to do. So that's why you've gotten into all these different deals in different states.
That's correct.
Was it difficult to find leads in different states?
No. Expo is a great way to get to speed date with lead investors and connect with them, to establish that relationship that lets you invest with them in this non-public offering syndication. But it does take a little bit of work on your part. You don't sit back and just wait for leads to find you. That's not how it works. You have to find them. And then when they make their opportunities available to you, you express interest, you do your homework, perhaps
Talk
you
to your
sign
mentor.
up. Yeah, what's that?
You talk to your mentor.
Talk to your mentor.
Yes.
You talk to your passive friends.
Yes.
And perhaps, you sign up and send money at some point.
Yes.
I'm going to back up a slide here because you mentioned you got to go to the leads, right? We got a couple hundred people out there at that camera with the blue dot on it.
Yep.
They're saying, well, I'm not in Texas. You said it's Texas heavy. You've got something right there.
That's right.
There.
So I've
That
got
says, hey, you can do this no matter where you are in the country.
There is
right?
this thing called Podium, and I would liken it to Facebook for real estate investors in a way,
Only in lifestyles.
only in
Only
lifestyles.
okay.
Members.
But it's free to passive investors. But if you spend $20 for 1 month, you can go out there and click connect to establish that first relationship with other lead investors. And in doing so, you tell them a bit about yourself. When they accept that, they will tell you about themselves. You've got an opportunity, if you want, to set up a phone call with them perhaps, get to know them better, and then that platform is used for them to present opportunities to you later. You don't have to pay the 20 months forever.
$20.
You can pause it if
$20.
you'd like and then reinstate it at a given
You can
period.
turn it off, turn it back on. I mean, I know people who turn it on once a quarter, go in and connect with any new folks, then turn it back off. But it's pay the $20 at least every now and then.
And I think we have over 400 leads on Podium, and it'll take you less than an hour to connect with all of them.
Right, so going onto the podium, I don't have social media. I don't do social media. I don't have Facebook.
Well, it's not Facebook.
Nothing to do
No,
with Facebook.
Like
So
Facebook.
how do I go?
Well, if you're a member, first you're a member, and on the member portal, there's a link to get to Podium, and you can sign up for a free account. Super easy.
That'll be part of the training this weekend, right?
What's that?
You will mention that again this weekend,
I'll talk
right?
about
Yeah.
Podium a lot this weekend.
I thought.
It's essentially it's a way to connect with leads. Robert, are you on Podium?
Absolutely.
How hard is it to connect with you, Robert?
Takes someone about 20 seconds.
20 seconds. You click a button, you fill out 5, 7 fields, and you put submit, and then Robert, when the next 48 hours, he gets back to you and says, hey.
It actually saves your data in each of those fields.
I know, it's
So
pretty
you only
cool,
put
right?
them in
I know.
once.
Yes.
I was making it harder. You only have to fill out 9 fields the first time and then 2 fields the second time and beyond. But it makes it super simple. Look, there's a squirrel. We just ran off. Sorry about that. Podium is really simple to use. If you want to learn more, come and take the seminar. Or you can go to lifestylespodium.com and check it out. There's a bunch of tutorials on how to use it and how to get connected. Okay? All right, so there's your portfolio. Let's talk about the
Okay.
finances of your portfolio now.
Right, so here are the 17 syndications we're in chronological order, I think, for for when we joined each of them, and you can see some of them have produced a little better cash flow than others. And granted, we've been doing this for less, I guess, right at 2 years now. So, so $1 million in so far total, we've made about $16,500 in distributions. The fun part for me, if you want to flip to the next slide, is that you can see the orange line shows where we've been investing in syndications, so up to $1 million. The blue bars represent where the cash flow has been coming in. So you'll see for the first year, we knew, you know, the lead investors told us, you know, you're going to buy into this deal and it will be X number of quarters before you can expect to see distributions. And so for me, what's exciting is that last quarter, the cash flow was $7,200. That's $2,400 a month. Okay, that starts to make a real dent in our expenses. And from here, things are going the right direction. So even if we don't do another investment in a multifamily syndication, the ones we've got, go back to the earlier slide, you'll see some of the more recent ones have not yet begun to pay distributions. So I expect that $7,200 to increase.
And you'll learn that this weekend. If it's a value play where they're doing renovations, they may say, we're not going to do any distributions for the first year. And so that's what she's talking about there. And now they're all going to ramp up, and you'll see it grow.
That's right. And then the final column here is anticipated, whoops, go back, total return. So at the time we bought into these opportunities, the lead investor set an expectation on timeframes and what they expected total returns to be at time of sale or refinance. And, you know, right now we're only a couple of years in. Most of these deals have not been going on even 2 years yet. And so we're just, you know, we're just getting the mailbox money, as they say, and watching each quarter improve over the quarter before.
And these returns, these total returns are after you get your original investment back. So another 100 for the first one, 111% return after you get your $100,000 back.
Yes.
Over 5 years.
And if we look at the return column here and divide it by those years you're holding, you're looking at close to 30 to 35% year-over-year returns. Who's getting that in the stock market? Who's getting that in your 401k? Right? What's a good year in a 401k? 8 to 10%? And you're making 30 to 35? I mean,
That's good.
you're getting rich, and everyone else is working a job, hoping, praying.
Robert's working, and I'm.
Yeah, he's working for you, right? You just sat right in the line of sight right
That's
there.
right.
Dude.
There's a question.
Cash flow numbers, is that monthly, quarterly, and
That's total.
Cash flow's total?
Cash flow is total.
Cash flow here is total.
Okay, and that's broken down by quarter.
Right, and so, you know, in one way, you look at this as, you put in $1 million and you got $16,000 back. Are you crazy? How is this a good thing? You know, so maybe it's not the pee in your pants excited moment there. For me, the excitement comes in the quarterly amounts that are increasing from nothing and clearly growing, that we're on the right track, that we're gonna get there. And with the multifamily passive approach, where at some point that property sells or is refinanced and you get your capital back, now you can go over and put that in another deal and just rinse and repeat so that the snowball continues to grow.
Well, tell us how your life's changed since you've joined.
Well, we could actually see the path forward from here. So, you know, we didn't know what that was. We didn't know what it was going to look like. We are extremely happy our friends gave us a nudge again. And that we attended the 2-day. It was a no-brainer sitting through the 2-day. You know, to have the instructor going through the details and you're going, well, they're not wrong. And yes, that is how that works. And yeah, I can do this math. And to realize that this is very viable and can work. So
I have a suspicion based on the verbiage, but who taught your 2-day class?
you're referring to the in your
instructor.
pants excited
Yeah.
statement.
Did he throw up gang signs and all
Yes,
that?
yeah.
Yeah.
Dave Fisher.
Dave? Okay, good.
And what's next?
What's next? Well, we're going to try to get this lady to stop working. To actually retire. We do plan to continue investing passively. And then as those distributions increase the amount of travel we do, time with family, friends. I want to play more video games, you know.
Oh, okay.
On
more-
Excel?
No, that's
No?
just.
Not Excel, okay.
Not Excel.
No.
No, that's actually, you know, work. That's this. This is my idea of work now.
Yeah.
My idea of work is playing with Excel and reading financial reports. So, and then long-term, just really avoid all forms of gainful employment and
Yes.
continue to be retired, basically. So,
Who likes the idea of being a passive? Anybody like that idea? Ah, it's wonderful. It really is. Who's a passive investor in here? Anybody? Oh, look at that. See, new folks, turn around, take a look.
Yeah.
Keep your hands up real quick. Okay. See, lots of opportunities out there. If you have a fear that there's not enough property, put your hands back up. Who's a passive? Look at that. And that's just what's here in the room. That's not what's out there across the country as well. There's tens of thousands of us.
Yes.
And there's enough for all of us.
Yep.
All right. Well, I guess you don't have a team, right? Your team are you invested with Robert by chance?
I am.
You are? Oh, hey, give him a high five right there. Right?
I'm our team.
You're on her team too? Oh, that's right.
Madeline's on my
We do have a
team.
mentor right there. Do you ever
I
use
see
your
some
mentor?
friends over here team. I see passives
yes.
that we talk to all the time here, so I've got a pretty good
Yes,
team.
you do call her.
I do.
Yes,
Yes,
of course.
you do.
I call and
Absolutely.
email Madeline.
That's
Absolutely.
right. He asked you that, so that's what I'm answering.
Anytime.
Yes.
Okay. Are there any questions in the room for this couple?
Dell?
Oh, look, Dell's here.
I've got a question for you. Can you hear me?
Yes.
So let's go back through those rates of return again, because when you were explaining them, they were a little confusing to me. You've got the $7,200 is your cash flow that came out to you,
Yes.
and that's over
That was
what
a distributions in total for third quarter
or third quarter of what year?
this year.
This year.
This year. Okay, so that's one quarter's distribution.
Yes.
Yes.
All right. Now you also have capital gains.
Yes.
Is that on that graph at all anywhere?
It is not.
It is not. All right. So have you had any of them refi yet and give you back your money?
No, none of our deals have gone full cycle yet, so everything's really what's anticipated based on the deals that were put forward.
We've only been doing it for 2
So
years.
here's what I want to get across, and I'm going to share it with you, but obviously other people are listening into our conversation. When you talk about get excited, pee in your pants, excited about something, you have to actually break the deal apart. Now, Chris, you had brought up that the overall rate of return was over a timely period of time, over 30% return, right?
If I back up one slide here, you can see that on the far right column over there, the expected return and then the expected time frame.
Right.
So just doing rough math, we're looking at about a 35% internal rate of return.
All right. So there's people in the room that are not as financially savvy, that haven't cracked all these numbers apart. We got to crack them apart for them, okay? Otherwise, you're saying they're making 35%, but that's internal. That's a combination of the different things together, all added together, right? And that's over a period of time. That's the internal rate of return. But what you really have to look at this as is saying, okay, what is in it, sorry, they worked earlier today, for me and for my life. And some of the returns that you get in investing is cash returns. Cash returns are what you live on when you're retired. Does that make sense? So that line going up at that sharp angle that you saw there, which I like, that if you got that
That's
picture.
investments. Yeah, the
That's
orange,
investments.
the orange is investments, and the blue bars are the cash that we're living on. That's
Right.
the excitement.
But as that line proceeds far north here, the amount of cash flow that you have to live on goes up. So I've been doing this for 35 years, and my cash flow is in the hundreds of thousands a month. So you ask yourself, if you keep doing this over such X period of time, how much will that cash flow be? It's going to get larger and larger and larger and larger. Where when most people retire, what happens to their income? It goes down as you eat away at your stocks. Does that make sense? Hey, you got so much money, it earns so much interest. And really all you're living off of is some type of an interest from that account. So if you put your money in the savings accounts, and I saw my savings accounts, Madeline, starting to go back down again now, because interest rates are going down. Your savings accounts are going back down from 5 to 4 to 3 to 2 to 1. And 2.5, 3 years ago, interest rates on my savings accounts were less than 0.5%. So what is your cash flow at that point? Well, then your cash flow on that $1 million is what? 1% of $1 million is what, 1,000? $1,000, and if you're getting 0.5%, that's $500 a year. You're getting $7,200 a quarter at this point, right? So when you evaluate, you see what I'm doing? If you evaluate it to what you could live off, that your net worth would leave you with on a cash flow vehicle. What's a cash flow vehicle? Savings account, CD, bonds. Do you follow me? Those things pay you every month some amount of money to live on. And when you retire, you need an amount of money to live on. Or you're looking at the equity. You said this gentleman understood the equity concept. If you have stock and you're living off your equity and all of a sudden the stock isn't paying you any interest or anything, every time you take some money out to live on it, that balance does what? It goes down. And so if it is earning you 4% or 5% a year, it's 4% or 5% of a smaller number every year. And your goal when you have that type of investment is to die before you run out of money. Does that make sense? I can only keep pulling it out for so long, I guess I'm going to have to kill myself, and then I won't run out of money. But in this case, that line's going up. That equity's going up, 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 up. And the cash flow's going up, 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 up. So when you pull it all back out of there, you go, well, the stock market's only going up 5 to 10% a year, and interest payments are only 3 or 4% a year, whatever you can get on your savings account. And you go, well, this is 35%. It's kind of disingenuous because it's at 35% against the stock market, it's at 35% against your cash flow. And what I'm saying to you is, once you realize what you're doing here, it's both. And so you have more and more and more cash flow to live on, but more and more and more net worth as you get older. That's the goal of the program. And if you can live as old as I am, you're going to be stinking rich because it just keeps growing. Okay? So I just wanted to clarify, because some people don't understand the difference. They hear 35% and then they think, but why am I not making 35% on the cash flow? The cash flow here is $7,200 on $1 million in a quarter. So if that's 4 times that, it's a quarterly. So 4 times 14, 20, 28,000, right? But if you earned a savings account amount, what would that be? Like $28, right? All right, there you go. Thanks, man. In other words, you're not making it sound good enough.
That's a problem, yes.
I made it sound bad.
Make it sound terrible.
No. Yes, another question?
Girish.
It may or may not.
Hold on, we'll get you a mic.
Hold on.
Yeah. It may not be exactly a question. I'm just trying to clarify in my mind, just as Das said just a minute ago, if you look at the third quarter of, say, 7,200, and even if you say 8,000 per quarter, and I just kind of eyeballed the investment for 700,000, right? So if you take 700,000 and 32,000 cash at the end of the year, what percent is that?
Well, I think what we need to look at
That's
is
one part.
each of these opportunities put forth a financial pro forma
Yeah,
with projecting returns ranging from 3-something to 8 or 10% cash
Right,
flow
right.
as the deals mature. And so in the first years, the cash flow is a little bit less, and as it grows, it'll be more.
correct.
So right now, if you look at $1 million invested and 16,000 to date, well,
Yeah.
the percent return doesn't look so hot, but that's not the whole picture.
exactly. So the cash flow is just part one, and part two is the actual
Equity
equity
capture,
buildup.
the capital, yeah,
Okay.
that's right.
That's just 2 of the 5 ways that we make money with real
Yeah, there's
estate.
actually 3 other ways we make money. And we didn't go into those because we do in the 2-day, but right here, one, every single month, my tenants are paying down my mortgage.
Right.
So in my mortgages of the apartment complexes I own, I'm probably making $500,000 a month in mortgage reduction. I don't see that money. It's kind of like a hidden 401k plan or something, But
Absolutely,
it's paying down, my equity's going up because of that. There is appreciation. You know, if there's a good market and things go up in value, you're getting just a appreciation. But there's also a forced appreciation where we go in and we fix something and make it worth more.
Right.
So we're capturing equity on purpose. It's a action-driven event, right?
Right.
Now there's one more, isn't there? What's
Tax
the
benefits.
What?
Tax benefits.
Depreciation, tax benefit. Can you imagine? I got back $1.2 million last year from the IRS.
So that's
I
where the
got
money
back
goes.
1.2 million.
Okay.
And most people would love to even make 1.2.
Yeah.
But I had to make a lot to pay in enough to get back 1.2. Does that make sense?
Right. Yes, absolutely. Yeah.
So, but boy, I'll tell you what, the end of the year when that check comes back, whew, that's sweet. That's sweet. All right. Did that answer your question at all?
Yeah. Very much so. Thank you.
All right.
Girish, I want to take that one step further. When was the last acquisition you guys did? How long ago was it? Because we've got.
Well, I've got 2 more that aren't on here that haven't closed yet.
Okay, so you've already sent them your money and they're just waiting for the deal to close. So some of these deals are really fresh. So you're looking at that cash flow number saying, it's just not enough. There's 2 things going on. Number one, we've got a deal and a value. If you're on the value side, there is no cash flow out of the gates. We're going to protect that asset. All the cash flow goes back into the asset, okay? So it doesn't come back to the investor. Part 2 of that is some of these deals will take a little bit of time to actually cash flow. We want to protect it, insulate it, build that cash so that we don't fail, right? That's protecting your asset. And then the other side is some of these things are new, right? And when they're
And that
brand
was all
new,
part
they're
of the
not going to
plan.
kick off. If you want immediate cash flow, go buy a single family house. If you got a lot of money, don't do that, right? But stay on the yield side.
But understand here, 7,200 next quarter could be 9,500. The following quarter could be 12. You know, it grows each quarter.
Exactly.
Correct. Yes.
And it's part of the plan. Like you'll see the first several months here, there was no cash flow, but I knew that, right? We knew that going in.
Now, isn't that cool?
A little bit of a
You know this going in.
Well, let me just give you the final
Smart
answer.
guys like Robert are out there saying, hey, I'm going to build this business. You're going to give me money. You're going to invest in it. You're not going to do anything. I'm going to go to work. And for the first 9 months, I'm not going to pay you anything. But month 12, the end of that 4th quarter, I'm going to give you a check for 6%. First one for the year. And then every quarter after that, I'm going to distribute to you. And you don't have to go to work. What happens when you have 10 or 12 or 15 or 18 of them like they do, and they all start distributing? Then you're making 100, 120,000. Like Del said, hundreds of thousands of dollars a month, right? And wow, right?
Well, yes.
A very expensive wife? So what he makes goes out the door. You need a frugal wife. My wife squeaks when she walks.
Until you meet my wife, then you go, this one guy can barely make it.
Well, I can tell you, since we joined Lifestyles, our net worth has tripled since 2015. And it was through passive investments and my one multifamily deal. So that kind of, whatever your pot of money is, or your net worth is, triple it over a course of 8 years.
It's Girish, right?
Yes.
Are you coming in this weekend?
I'm hoping to, but
It should be a hard yes. Are you coming in this weekend? Everybody's listening. Are you coming in? You need to be here.
Just say yes.
Come on, be here. And sit right there, okay? I promise not to spit. We need to get you in the class so you understand exactly what we teach and how it will change your life.
Another question?
Hold on, I'm getting you a mic. I think your hand is. So one thing I want to mention, Madeline, you spoke about your net worth tripling since you started in the period of 8 years. But a lot of people may not realize, if you heard what she said before, how long did you work to acquire that net worth?
35 years.
You and your husband.
Me and my husband, 35 years to
So-
acquire that.
Exactly. After 35 years of working, tripling your net worth, after that, put that in perspective.
It's big.
I'm assuming that the quarterly cash flow is coming from rents?
It's distributions from, it's
Operational
distributions.
Okay.
So we are,
Net profit distribution.
It is, you're correct. It is coming from operational income, which is rental income, but less expenses. So all the expenses come out. Now we look and see if we have profit. Now that we have profit, we put some away for safety reserve, and then we decide how much we want to distribute, and whatever that is, it goes out to everybody in their share.
Okay, and are those distributions taxable?
Not if they're done correctly.
Okay.
In other words, if you've got enough depreciation booked into the thing, all of your passive income can be non-taxable. It could be deferred taxable into the future. Now, if you're a professional, real estate professional, then you can actually take the losses, the excess losses, and go against your earned income. But you're not going to be that if you're just a passive. You have to actually be an active real estate investor to do that.
And at the end of the deal, when they close out and everyone gets their money, is that taxable?
Yes.
Okay.
And the reason it's taxable is because you can't 1031 from a syndication out, because you don't own real estate. A 1031 exchange, which would get you out of doing that, is going from real estate to real estate. So if I own a piece of real estate and at the end I sell it, I can go buy something else and not pay the capital gains. But on these syndications, unless the entire syndication up front agrees that they want to do a 1031 to the next deal, then you won't do it. You'll just break the company up, and then you will own taxes at that time.
Scott, are you coming this weekend? Yes, sir. Yeah, you sit right there. Okay, right there's fine. Cool. I got about 40 minutes of taxes. We'll geek out on taxes. Okay, I'll teach you how to not pay taxes. Who likes not paying taxes? Me too. Yeah. All right, I get the last question. Yes. What would you tell the new folks in the room? Because you waited 7 years to do this, 2015 to 2022. What would you tell the new folks?
Get started.
Yes.
I mean, don't wait.
Do you wish you had gotten started earlier?
Okay.
Yeah, I wish I had done this instead of that franchise thing.
Oh, yeah.
Excellent.
Definitely.
In fact, I would have been a lead investor if I had done this instead of the franchise thing. But now I'm happy to let Robert work.
Lynn, anything else to add?
Nope,
What would you tell the new folks?
Glad we're here. And yes, we are passive, but she does a lot of work with it. I mean,
I'm a geek.
you're a geek.
I mean, I'm an Excel geek
She
and an
watches
accounting
where the
nerd.
money is, who's filling out their forms correctly,
Who's sending their
answering the
financial reports on time?
That's right.
I love
This is
it.
what she does, yes. Yes.
Excellent. Well, thank you so much for giving and giving back
Thank
and
you.
sharing, opening your books. You guys are awesome. Thanks so much. Absolute pleasure.